Hey everybody, Jay Alexander here with Homestar Financial. Want to record a quick video here. I work with obviously quite a few buyers, and this market right now for buyers is really tough. But I've got some data and some a different way I want. If you're in the market to purchase a home, there's a different way I want you to think about it. Um, but like I said, I want to go through some basic data first. So let's jump right in it here real quick. So the first thing, and my brother Lance put together a video not long ago. I encourage you to hop on his Facebook page and take a look at it. But what we have here is we have the birth rate in the U.S. This actually goes back to 1928. And you're like, Jay, you're talking about buyers. Why are we talking about birth rates? Well, I'm going to show you that this is a huge part of what's taking place in this market right now. So right now, in obviously we're in 2022. A 35-year-old today was actually born in 1987, which is this bar right here in birth rates. This is the bar that we're in for people born in 1987. The reason this is important is because if you look back in time, because everybody's worried about another housing crash, a market bubble, what we all lived through back in 2008, all the way through 2011, 2012. Well, if you look back at that, let's look at what happened. The birth rates then, you can see birth rates started to go down and really bottomed out around 1973. Now, the reason for this, in my opinion, is 1973 coincides with legalized abortion in the U.S. Roe v. Wade was passed in January of 1973. Well, your median home buyer, kind of the home buying age, most people buy a home after they get not just get married but have a child. So we're running this based off a 35-year-old home buyer, which is a very significant portion of the home buyers in our market right now. A 35-year-old that was born in 1973, they became 35 in 2008. So you can see we were building houses assuming a demand and a population increase, but population actually went down and stayed pretty flat for several years before it finally started to tick back up. And the top of my screen here says, everybody has to live somewhere. We overbuilt houses. That's what caused the housing bubble. And then to try to rectify that, instead of letting the market solve the problem, we actually came out with all these crazy loan programs where you didn't have to have any credit and you didn't have to have any money down, didn't even have to have a job. And obviously, we saw the results of that. It wasn't very good. Well, now the birth rate has been increasing since 1973 for years and years, and we've still got several more years of increasing birth rates in the U.S. So while we have been, seeing population grow and the number of households created and families being created, people getting married, having children, has been going up during this time frame, we haven't really been planning for them as far as needing somewhere to live. Let me show you this graph. I posted this recently on my Facebook page. This shows the number of homes that we've built in the U.S. by decade. And you can see as a result of the Great Recession, the mortgage meltdown, the credit crunch, as a nation, we quit building houses. In 2010 through 2019, we built approximately as many homes as we did back in the 1930s prior to World War II. Not a great decision there. And I think what we're seeing now is the ramifications of that. What we have increased population growth with people coming of age that are at a home buying age, and we have uh, very little supply to meet that demand. And I like this next chart. The housing vacancy. This tracks housing vacancy as a percentage of housing all the way back since 1965. You can see back here during the mortgage meltdown, during the credit crunch, housing vacancies shot up because we had built too many houses for not enough people. Over time, we've whittled that away. We've sold these houses. People have moved in, moved in, moved in. And now the percentage of vacant homes in our U.S. economy are at an all-time low. So any home that's out there is being occupied, and there's just not enough homes on the market right now. That's why we have so many inventory problems, not just in the metro Atlanta area, but really in every market nationally right now. So this is real simple economics, guys. Increasing demand that we expect to not just hold steady, but increase over the next several years, plus limited supply is causing prices to go up. I only expect demand to increase. And because of the perfect storm now of coronavirus disrupting our supply chain, it's very difficult to bring homes to the market. The CEO of KB Homes came out with a statement today that said the biggest challenge his company has is bringing homes online. It's not selling the homes. Demand is robust for new construction. It's just trying to get the homes finished, trying to get them on the market is the most difficult thing. So once we get through these supply chain disruptions and builders can build houses like normal, well, that will help. But we've still got to work through a decade of underbuilding homes, right? So what this has created, it's created the perfect storm of not enough houses, way too many buyers, and it's causing prices to go up. And what that means is that it's really, really tough to be a buyer in this market, right? If you put an offer in, you're always competing with people. I've got plenty of buyers where fatigue sets in, and I think it's a fair question. Buyers are saying, should I take a break? Should I wait till later in the spring or summer? Maybe there'll be more homes on the market. Maybe it just won't be quite as insane as it is right now. Well, I think the better question that should be asked as a buyer is not should you take a break, but what is the actual cost of waiting? Okay, what does it cost you if you wait to purchase a home versus trying to stick with it and buy a home right now? And I have this other chart here I want to show you. So this is my cost of waiting chart, and I've done this for just a random house in Carroll County, Georgia, listed at a $319,000 sales price. This actually is a home that's going to be hitting Fairfield here pretty soon. But if you were to buy the home today, you can buy the home hopefully for $319,000. We all know maybe it'll go for a little bit more. And this is based off a simple 5% down conventional loan. And we have all of our numbers for what will happen. But let me show you what happens in the future. So if we wait 6 months to purchase a house, so if you wait 6 months to buy a house, I expect two things to happen. The first one is everybody is predicting interest rates will go up. I agree with that prediction, especially in the short term. So we expect rates to continue increasing with inflation, and I could do a whole nother video about that, but just know we expect rates to go up. Additionally, due to the data I just showed you, we expect demand and home appreciation or demand to drive home appreciation and the price of homes to go up. Okay. So the same house that you would buy today for $319,000 is going to sell for closer to $336,000 just 6 months from now. And as you can see, we're not expecting this trend to change over the next several years. We're expecting over 3 years that the same home that you would buy for $320,000 right now will probably sell for $370,000 3 years from now. Okay. Now, to make the math simple and to try to hold some things even, I kept interest rates the same on this analysis. I actually think over the next several years, you could see a world where rates will continue going up. But let's just roll with interest rates increasing for the next few months and then holding relatively steady. What this actually means to you, if you're a buyer, or agents if you're working with buyers, what this means is a customer, if they wait 6 months to buy a house, well, first of all, just the fact that they're paying more for the house and that the interest rate is going up, that monthly payment is going to be $144 a month more expensive, or $1,700 and some change every year. So to buy that same house, it's going to be an additional $1,700 per year. In addition to that, if we wait 6 months to buy a house, not only do we lose the appreciation, the fact that the home would be worth maybe 10, 15, maybe even $20,000 more than what you paid for it just 6 months from now, you're also going to lose 6 months worth of mortgage payments, right? Because you can't pay off a mortgage unless you're in a mortgage. So that the amortization, the fact that the mortgage would be getting paid down every time you make a mortgage payment, you lose that benefit as well. So the total amount lost just in 6 months is almost $20,000 on a $320,000 house in Carrollton right now. Now, if we keep moving up the graph, wait a year, there's about $29,000 worth of cost. 2 years, $46,000. 3 years, we're talking over $65,000 worth of lost equity by simply not buying a house in this market. Okay. So what I'm telling my buyers is, in my recommendations, based off the market we're in, is to stay engaged. Okay, my recommendation is don't wait. Don't bring these extra costs on you. My prediction is it's only going to be more difficult and it's only going to be more expensive to buy a house in June or August or December versus buying a house now in March or April. Okay. Your effort, I know it's tough out there. I know it can be real disheartening to lose out on offers. I know it's very frustrating to hear that you're one of 19 offers or 27 offers in this market. But if you can stick with it, that effort will pay off. Literally, it will save you thousands of dollars versus waiting to buy a house several months down the line. I also recommend use a professional real estate agent for negotiation. I know most buyers are doing this, but I still talk to people that think they can do it on their own or they can get a better deal or they have a better shot. Guys, you really need someone in your corner in this market, and using a good real estate agent is very important. I certainly have several I can recommend to you if you're looking for an agent. I also tell my buyers, you've got to do something to make your offer stand out. Okay. I encourage you to take advantage of HomeStar's 14-day guaranteed close program. It's something that we do. We absolutely guarantee that if we get a customer, we can get them closed in 14 days. That makes your offer stand out and look a lot better versus the other offers that we see out there. You can also take advantage of, we call it our HomeStar Cash Advantage program, where you can make an all cash offer on a property. So you got to think, if you're making an all cash offer on a property with a 14-day guaranteed close, you really have a much better shot of winning your offer versus a 30 or 45-day close date with all kinds of crazy contingencies and things like that. So, guys, if you want to know more details about that, give me a call, give my team a call. You can reach us at the number here on the screen. Hope you enjoyed this quick video. Certainly, if you have any questions, drop it below. We'll get to you as quick as we can. Thanks for watching, and we look forward to working with you real soon.